So overall valuations, do you think they're going to continue to come under pressure like we've seen this week, or is that kind of set the bar a little bit lower for the rest of the year?
Well, if you look at software, multiples were down 10% last year. They're down 15% approximately in the first week of the year. So you've had a massive exit in software across internet, a number of the names. And we think ultimately we're not quite there yet. There's still some pretty frothy multiples. Remember, multiples went up 80% in 2020, and we're still unwinding from the COVID pull forward. So I think we're getting closer to the bottom. We're probably not quite there yet. I think a number of these companies are going to give pretty conservative guide for the year. And clearly, we got some fairly positive news out of one company today, and the stock went down 8%. So it just tells you right now that everyone wants out of tech in the short term. It's unclear when they come back. It's a rotation to other sectors like energy and financials. So unclear how long this lasts, but certainly, tech has felt it, and we think it's going to take some time for this to come back. So probably not quite at the bottom, but certainly getting closer.
What about for the mega cap names? Are they going to follow the smaller cap names lower before they rally, or what?
Yeah, it's a good point. I mean, small cap got rocked first, then mid, and now large cap is the most expensive names, at least in software. So you've seen multiples at 3x that, and large cap as everyone's hidden, Adobe, Salesforce, Microsoft. Those names are really coming undone as well. And so, Microsoft down 7% start the week. That's a story we think is a great fundamental franchise for long-term investors. Again, I don't think we're at rock bottom yet. I think we're getting closer. But we've said this, that you still have, again, an unwind, and they took it out on the small caps first. We think small cap actually looks pretty interesting. Most of these multiples are at, private equity, excitement, takeover land. So I'd look at it and say small cap coast is clear, large cap not quite there yet, but still some great franchises. And for long-term holders of Microsoft, Adobe, Salesforce, we don't really have a concern there.
But I think your favorite mega cap tech pick is Meta, right? Why do all the tech analysts like Facebook and Meta when the rest of the world likes to hate it?
We like it. It's cheap. I mean, if you think about it's 11.5 times EBITDA. They're cheaper than Google. And, Google worked last year, and typically Google doesn't work every single year. It embraced the oddness, as we say. It works in odd years, not as well and even. So I think, Meta is doing some really interesting things. If you look at what happened with the Oculus, no one expected over the holidays it'd be the #1 downloaded app. My kids are fighting over I should have bought 5 and I bought 1, right? Everyone, this isn't a sign that there's on-roads to new revenue opportunities. And again, it's still a rounding error for the business, but it's effectively showing that they can do more than just advertising. And so this is an on-ramp to the metaverse. It certainly is an on-ramp to Meta getting to the younger audience, which they lost to TikTok and to Snap. So I think it's cheap, Sarah. And we think, again, their advertisers continue to say they still get the best ROI in the platform.
Is China tech cheap for a reason?
It is. I don't cover China tech, but it's cheap for a reason. And I think there's a whole, that's a whole nother conversation of everything that's going on there. I think a lot of that's really out of the control of what we see. We focus on the U.S. Some of these U.S. tech names are getting really cheap as well. Again, as I mentioned, with Meta at 11.5 times EBITDA. Many of the internet names are cheaper, way cheaper than the software names. So I think internet feels, at least in the U.S., feels better than software. Software and some of these higher flyers still have a long way to go on valuation downside. I think the common mistake, too, is many investors just feel like we're going to bounce right back. And I think the last couple of years were an anomaly. Seeing 50 to 80 times revenue multiples, that is probably long gone. It's reserved for the elite of the elite. Yes, Snowflake is a great story, and they'll maintain a great multiple. But I think this is going to be difficult to maintain those type of elevated multiples across the industry. And I think those days are gone.